Hello, everyone. Today, we are going to be talking about trial balance. Now, as you can see on the screen, we have Reed & Company trial balance. This is all the information. Notice that there's not a debit or credit. This is all the information, all the transactions that were carried out during the year, January 1, 2006 to December 31, 2006. Here we see we have purchases, and we know that those are the goods that you would have purchased during the year for your business. Sales refer to the items that you would have sold from your inventory. Then we have return inwards. Now, what return inwards is or mean is when your customers, if you have a business and your customers return goods that they would have purchased from you to your business because they were faulty or the wrong size or for another reason, the wrong color or for another reason. Return outwards is when your company or your business return goods that was purchased from a supplier. So goods that you would have purchased from your supplier to resell them or to your customers, they were faulty. Or it could be the quantity was incorrect or the quality was not to your liking. So you would have returned those to your suppliers. Discount allowed can be it's the same thing as when you go to Payless downtown or Payless in Tree. Even Sammy's shoe store downtown, and they say, okay, you see on some of the slippers or the shoes that says 20% discount or 50% off. So it's basically the amount of money or the amount of discount that each customer is allowed by the company. Discounts received is when your company, your business, purchase items from your suppliers and they decide to give you a discount. That's discount received. And we know wages and salaries are when you would have, you have to pay your employees at the end of the month or every fortnight if that's what your business does for the work that they would have done throughout the month. Carriage inwards is when for example, you're at home on a Saturday and you're hungry or you're throwing a birthday party. And so you decide to order some pizza or a cake from PriceSmart, or again, some pizza from Pizza Hut or Domino Pizza. You know that you have to pay the delivery fee if you want it to be delivered to your house. So that's carriage inwards. Then carriage outwards would be the opposite of carriage inwards, of course. When your business is delivering maybe a bed, if it's a furniture store, and people order a bed and they order a fridge and they want it to be delivered to their homes. You as a business, you would have to purchase gas to put into your delivery truck to make that journey to your customer's house to deliver those items. So it's a cost to you. And that's what carriage outwards is. You're going out of your business. Carriage inwards, things are coming in. All right? And of course, we know what printing and stationery is. We know what all general expenses and so on are. Bad debts written off here. Bad debts written off. Bank overdraft, provision for doubtful debt. You may not know what those mean, or you should know, but you probably don't remember what they mean. So bad debts written off. At the end of during the year of business, persons would have owed you some money. Many times we trust, let's use the word trust, or a business will credit its regular customers because they know that, oh, John is a regular customer here at my salon or at my supermarket, or even the little corner shops that you regularly visit. and purchase things. They might say, okay, I'm going to allow you to trust, or I'm going to credit you a Malta or a Supplegen or, you know, some rice and flour because you're a regular customer. I know you'll pay me. So bad debts basically is just that. It's what you owe. It's the bills that your customers owe you, and you hope to get that money. You hope that they will pay you after you have trust them upon a rice flour or a tin mackerel. Provision for doubtful debts is when you know for certain that Billy owed you some money during the year, and Billy said, okay, I'm going to pay you for March. March come and Billy has not paid you. Then Billy comes back and Billy says, you know, things didn't go as I planned, as I hoped that they would. So I'll pay you in April. But April comes and you've heard that you've heard that Billy died, right? So you know for sure that you will not get that money back. So in order for you to, you know, I'm so sorry to be so dramatic in this explanation, but you know for a certainty that you will not get that money back, right? It's all the money. Provision for doubtful debts is an account that you will create to account for all the money that you know was promised to you, but the time has expired and you have not received that money, and you know for a certainty that you will not receive this money. So you make a provision for doubtful debts account. All right, so provision for depreciation. Here's another one, provision for depreciation. This is when the value, here we have property, plants, and equipment. So the value of the property that you have purchased for $10,000 5 years ago, now it's 2023, and that value of that property has depreciated. It has been reduced. If you buy a car over the years, the value of the model depreciates. All right, so that's that. Let's move on to solving the problem or creating the trial balance. Here we have our debit and our credit now. I've noticed that some persons are having an issue with debiting and crediting. Therefore, please pay keen attention. I have color-coded everything. So all this information here was taken from here. See, it's the same thing. I've just color-coded it to make it easier for you to identify which is which. Purchases should be debited. Sales should be credited. Return inwards should be debited. Return outwards, credit, because it's going out. Everything that's coming in your account will increase it. Whatever is going out of your account, you're losing, and so you will credit it. Discount allowed, debited. Discount received, credited. Wages and salaries, all expenses here, general expenses, all of these expenses here are debited. And if you had rent, it will also be debited. Now, creditors, the people who owe you, creditors is credit. As you can see, the word creditors come from credit. So that should help you to remember that creditors is always credited, just as sales is, and all liability and capital is always credited. Here we have capital here, it's credited. Our property is an asset, and plant and equipment, they're both asset, and so we debit them, or we will debit them. Provision for depreciation, because the value of the property and the plant and equipment are decreasing, therefore we're going to credit it. So notice here, property, plant, and equipment as an asset, we debit them because they are assets. But over the months, the value, and I'm saying over the months because we're just dealing with this year, this financial year, which is 2006. So from January 1 to December 31, 2006. So during that year, the value of the property, the plants and the equipment would have depreciated or decrease, reduce, get less. So we credit it. And of course, all this figure here under the debit section, we're just going to find the sum of all the figures there, and it will become our balance. We will do the same thing for the credit side here, and that will become our balance. The amount that the credit side is the balance should be equal to the amount that the debit side is balanced by. I hope that you will understand that. Here we have the solution. So Rita and Company trial balance as at 31st December 2006. Always ensure that you write the heading because marks are awarded for those. Debit credits are dollar signs. So again, color coded. Oopsie. Let's see what. All right. So this $8,400 was down there. Let me see if any other got down there. No, it seems like everything else is fine. So purchases, again, is debited. Just as how I put it up here, the code that I have here, purchases debited. All I'm doing now is to write the figures. And where we got the figures from or the numbers from is this information here in the question. See? Question. That's where we got all the information from. 334,500 is for purchases. So, and these are the key. All right, so our sales figure again is credited. We debited return inwards because you're getting something. So it's going to be, that account is going to increase. We credited return outwards because you're losing money. For our stock, it would be the items that we have in the business. They're ours. We can always sell them today, tomorrow, or next month, and we'll get some money. So that's debited. Stock refers to the items. Stock or inventory refers to the items or the products that are available in the business. So if you own a supermarket and you purchase some breads from the bread truck, or you purchase eggs from the egg farm, all of that, everything that you purchase will be your stock. And if you think about it, whenever there is an hurricane and the person who does the weather report or even the news report, they'll go in the streets and they report from their direction and says, oh, supermarket A or supermarket B, they are restocking because a lot of customers are coming and purchasing the items in preparation for the hurricane or the earthquake, whatever it is. So they'll call the supermarket shelves. They'll say they have to restock the shelves. Or they purchase a stock of flour or sugar and it has all finished. They'll say they have to restock the shelf. All right, so again, stock is our asset. It's what we own. We'll debit it. You can follow all the color codes going down. Wages and salaries, all of our expenses here, carriage inwards, outwards, printing, electricity, motor expenses, telephone, all these expenses here are debited. Creditors and capital, again, are credited. And if you had a liability, if there was a loan here that you owed to the bank during the year of January 1 to December 31st, you would have credited it. Now we move on to provision for doubtful debts at the 31st of December 2006. It's a heading. So let me go ahead and underline it for you. It's an heading. And the other heading we have here is provision for depreciation. I think there should have been another one. There wasn't. Oh, so that's just those two headings then. So cash in hand, the money that you have in your hand, $1,200. And that's where we got from the question. Yes, here it is. Credit cash in hand. Let me see if I made any mistake. I did. So cash in hand should be debited. It's your money. And again, do not be afraid to make mistakes, because when you make mistake, you will learn. No, let's see. Something went wrong. Oh, I didn't make a mistake. I didn't make a mistake. So it's because of I guess because of how close the things are. So here is cash in hand. If there were lines, I would have realized there's not a mistake. So our color code, cash in hand, it's debited. Bank overdraft, that is credited. Capital is credited. Double check bank overdraft, bank overdraft, bank overdraft. Yep. It's way down here. See, it's right here. It's mistake. It's I changed the font size to 13, as you can see here, so that you could see it clearer. And I guess that's why it went all the way down below the bank overdraft. So here we have the figure, bank overdraft, $35,100. It means that the bank would have allowed you a set amount to withdraw, even though you don't have that amount in your account. Therefore, you would have owed the bank $35,100. To put it in simpler terms, you have an NCB account and you only have $62,000 in that account. However, you withdrawed $70,000 from that same account. The bank allows you to. It allows you to. In other words, it's giving you permission by whatever arrangements you made with the bank, but it allowed you to withdraw the $70,000, and you'll have to repay this at a later date. So it's kind of like using a credit card. So I have an NCB credit card, and if my limit is $100,000, I can withdraw I can spend $120,000 or $50,000, and they will allow me to, but I will have to repay that. I would have overused my credit card. All right? So use more than that you originally were able to use. Now, what we did, this balance here, remember I wrote balance on the key here, see here, and I double lined it or double underline it. So basically what you're going to do is get your calculator and punch in all these figures here, all these numbers there under the debit column, and you are supposed to get $706,200. You can take your time to punch it in the calculator. You can replay this video. You can cut the speed of the video to make it go slower, so you can pause it if you wish, while you're checking the numbers to see if you would have really gotten this $706,200. Now, when we go over to the credit side, we have sales, return outwards, discounts received. We have creditors, bank overdraft, provision for depreciation for property and plants. The sum of all these figures, again, should give you $706,200. Now, the trial balance is balanced because both the debit and the credits column have the same balance. So it's correctly balanced. And that's it for class today. That's it for the lesson today, rather. I truly hope that you would have benefited from the color coding. And when you're reviewing it, you'll be able to know exactly why we debit and we credit each items